Today we're going to be talking about all things life insurance and basically get a general understanding of the different types of life insurance, how they work, and hopefully it'll provide you enough information so that you can choose the best life insurance for you and your family. So here we go. There are two main types of life insurance. The first one is very easy. This type of life insurance provides a certain coverage over a specified period of time, and it's known as term life insurance. So oftentimes you might see it listed as term 10, term 25, term 40. So that term is the number of years that insurance is valid for, and there's a specified coverage. So basically, after this term is over, your contract finishes. That's all. Most term insurance policies now come with a renewable and convertible option. So once your term finishes, you know ahead of time of how much your premiums will be once your term is finished. So why would somebody choose this type of life insurance? As a mortgage broker, if I'm working with a client who has purchased their first home, oftentimes here in Canada, first-time home buyers will have a mortgage period or a mortgage amortization period of 25 years. So a lot of these clients will take a term 25 life insurance policy to cover the cost of their mortgage should either spouse pass away. So term insurance is no frills. So basically it's your coverage, your death benefit is this amount for this specified period of time. That's it, that's all. There are really no extra options that come with term insurance. In that case, why would someone choose this type of insurance? It's cost effective and it covers a specific need. The second type of life insurance is called permanent life insurance. So permanent life insurance, as opposed to term, permanent life insurance covers you for your entire life. Usually, when you have a permanent insurance policy, there is both a combination of life insurance, so death benefit in the event that you pass away, that's paid out to your beneficiary, but there's usually also some type of savings component to it. So permanent insurance has a few more moving parts depending on what you're looking for. You could have a permanent insurance that has a guaranteed savings portion. So basically, if you do take a life insurance policy, you'll know ahead of time when and how much you'll have in terms of that savings. There is also policies available that are life insurance with a guaranteed savings portion and then a non-guaranteed savings portion. So this type of insurance, there's more money typically that's included in the savings portion, but the non-guaranteed portion is, as the name suggests, not guaranteed. Also, with these types of policies, the savings portion, you as an investor don't have control over, and it's the insurance company that dictates how that's funded. There's also another type of permanent insurance, which is known as universal life. So universal life insurance is part life insurance, part investments, and the investment portion is something that you as a client can control. Not to say that every type of investment is eligible in a universal life, but pretty much most of the standard mutual fund type investments are eligible within a universal life. The red flag that I would like to share with you about universal life insurance policies is, unfortunately, as an advisor, I hate to say this about those in my field, oftentimes I've seen universal life insurance policies poorly offered to clients. What do I mean by that? So with a universal life insurance policy, the investment portion can be tax sheltered. And the idea behind it is that when you see it offered to you in the form of coverage, you'll often see a minimum and a maximum payment. So the minimum payment, just for argument's sake, might be $50 a month. So that is the amount of your premium monthly in order for you to keep your insurance coverage. You'll also see a maximum amount, which may be, let's say, $150 a month. So you as a client are allowed to contribute up to $150 a month for your universal life insurance policy. The difference between the minimum and the maximum is invested as you choose within that insurance policy. Oftentimes, what I see though is that it's not explained properly to clients, and I see this a lot in adult clients, usually in their 30s, 40s, and 50s, that they've been contributing to this universal life insurance policy for a long period of time, thinking that they have a policy that has both insurance and investments. However, nobody explained to them that in order for that strategy to work, you need to pay more or you need to contribute more than your minimum payment. And what happens is, and I've seen it before, where a client has had this universal life insurance policy for many, many, many years, 20 years, and when they look at the cash value of their policy, there's only $700 in there, and that's no good. And that's no good. Unfortunately, it's one of the highest paying commission life insurance products out there, which I believe could be a driving force for these policies to be offered. It's not that universal life insurance is bad. It just has to be strategically offered as part of someone's financial plan. As an advisor, I would not consider offering this type of insurance to anyone who doesn't already have their TFSA maximized, their RRSP maximized, perhaps maybe an individual pension plan as well. This is another tax shelter that's not as liquid as these other types of investments. So as an advisor and as a holistic advisor, I would not consider universal life to an adult unless all these other parts of their financial plan are satisfied. However, it is a good option. A permanent life insurance policy is a good option if you're looking on building some type of wealth for your children. So I do believe in permanent insurance for children. When my children were born, I not only opened up an RESP for them, but I also started a insurance policy for them that was paid over 20 years. And what that does is that it provides my children life insurance coverage for life. I pay it off in 20 years, and there's also an investment component of it. So if all else fails, they have insurance coverage, because let's face it, life insurance is not the first thing that our kids are going to look for once they get out into the workforce, but at least they have some type of base coverage. And they also have this investment portion, which after 20 years could be used towards a down payment of a house or towards their wedding or anything that they want, or they could just leave it there to grow. So these are the different types of life insurance. And like I always say, what works for one family might not work for another. And I've even met couples who don't agree on the type of life insurance they should get for their family. Please note that life insurance and the type of life insurance that you get is very personal. As an advisor, I do offer life insurance on a needs-based analysis. So we do look at your insurance need. But in reality, sometimes clients have their own thoughts in mind about life insurance. So even if your best friend, your parents, or coworker, or your neighbor say this is the best type of life insurance, it might not be the right type for you. So it's really encouraged for you to work with an advisor to help you through the different types of life insurance, because there are a lot of different options, and make sure you select the right option for you and that's affordable for you. Because at the end of the day, the purpose of life insurance is to replace an income that's no longer coming in because you're no longer here. Or in the case of someone who's a stay-at-home parent who doesn't bring income, it's to replace that financial presence that you bring. I speak to a lot of stay-at-home parents who don't bring in income, but their presence has a value if they're no longer here. So you want to make sure that that need is satisfied, because at the end of the day, nobody likes to talk about life insurance, and nobody likes to think that something will happen to them. But those who unfortunately did go through a sudden death and there was a life insurance payout, you better believe that they were happy that life insurance was in place. Life insurance isn't about you. Life insurance is for the people that you're leaving behind if you were to pass away suddenly. If you have any questions, feel free to comment or to reach out. I'll be available to answer any of the questions that you may have regarding life insurance.